Hey everybody, welcome back. Today is another episode of the Joe Credit Show. Today we're going to talk about how often should you apply for credit cards. I'm Joe Chavarria. We'll unpack that plus more on another episode of the Joe Credit Show. So the question is, how often should I apply for new credit cards or just credit cards in general? And I'm going to go over a bunch of bullet points and a bunch of information to explain my answer. But let me give you my answer first. And my simple answer is rarely. You should rarely do this, almost never. But over the course of time, it'll be a good amount if you're continuing to build credit. And if you look at it from like a yearly perspective, year by year, the answer is rarely. You should rarely be applying for new credit cards. And I'm going to give you my reason. Of course, some people may disagree with me on that, and that's okay. I love hearing different sides and different opinions. That's what I'm all about. That's how we grow as a society. Other than that, that's my answer. That's my position is rarely, and I'm going to give you my reasons. First and foremost, my position on this is that I do believe it's okay to have several credit cards, 2 credit cards, 5 credit cards, 10 credit cards. I don't think that it's a bad idea to have many different credit cards. However, I do believe it is a bad idea if you get yourself into a lot of debt, which means you don't really know how to manage these credit cards. You're forgetful for these credit cards. As long as you're on top of it and you're controlling, exactly how many cards you have, what the limits are, what the balances are, the payments are like on auto pay or whatever, you're on top of it, then I'm okay with you having several. If you get overwhelming, you can't keep up with it, I don't think it's a good idea to have too many, maybe 2 to 3, maybe a couple of them would be okay. My position is the reason why you don't want to apply for so many credit cards so fast is because it could actually lower your credit score. And here's why. So credit cards or inquiries, let's talk about hard inquiries for a little bit. So hard inquiries, that's when a bank or a company checks your credit report to use your credit report and use your credit score as a deciding factor on whether or not they should extend services to you or credit to you or loan to you, whatever it may be, right? They're using your credit report and your credit score to base that decision on. Now, there's certain industries that will allow you to have multiple banks, multiple companies checking your credit at the same time, and you won't be penalized for it. And those industries are 3 industries: mortgage, auto, and student loans. And the reason why each inquiry will not, so let's say you were trying to apply for a mortgage loan, trying to get a house, and you went to 5 different banks. And the reason why you're going to 5 different banks is because you want to see who can offer you the best interest rate, right? You want to see who can give you the best deal possible, because not all banks are equal. All banks are competitive. They want to compete for your business. So obviously, by being competitive, that's a beautiful part about a free market, is that when they're competitive, they're going to really fight for your business and try to offer you the lowest possible interest rate. So let's say you want to see who's going to offer you the best interest rate. And however, you're scared, or you don't want to do it because you don't want to ruin your credit, right? You don't want to have too many hard inquiries, back to back and affect your score, and then eventually hurt your chances of even getting approved for a mortgage altogether because your score dropped from having so many inquiries. So FICO scoring has logic embedded in certain score models called deduplication. So deduplication is where the deduplication logic will kick in when FICO scoring notices that on your credit report you have multiple inquiries from these industries. As long as they're within 45 days of each other, they're going to be counted as one. So let's say it's day 1 and I'm going to the bank and I'm going to, let's just say, ABC Bank, and I'm doing my mortgage application. They run my credit and I have a hard inquiry. And they say, okay, Mr. Chavarria, we're going to go ahead and offer you, we can do the deal. We can get you a mortgage loan and the interest is going to be 4%. And I say, okay, that's great. Let me think about it, because I have some friends that are getting 3%. And so I want to see what else is out there. I appreciate that. I appreciate the offer. Let me think about it. Let me get back to you. And I want to go, let's say I don't do it right away. Let's say I don't do it tomorrow. I'm busy. I get back home. Kids are running around. It's crazy. A lot of stuff going on at the house. And then next week, when I have a little bit more time, the following week, I decide to go to, Bank ABC, right? Different bank. And Bank ABC says, okay, let's run your credit and let's see where you stand. They run my credit and they say, you know what, we can go ahead and give you 3.5%. Okay. So in that scenario there, that second inquiry was within 7 days. It was within 1 week of that first one. Okay. So what FICO scoring will do will treat both of them equal. They'll be scored as one once all the dust settles, because there is a 30-day grace period to where they're not scored right away. But outside the grace period, as long as those inquiries are within 45 days of each other, they'll be treated and scored as one to allow me, the consumer, to do rate shopping, right? I want to shop around for the best rate, but I don't want my credit to be penalized in that process. Credit cards is the industry that deduplication logic does not apply to. Okay, you can apply for multiple credit cards within 45 days of each other, and each one will be counted against you as a hard inquiry. And so that's one of my positions on why you don't want to get so many credit cards so fast, is because of all the hard inquiries that are not deduplicated. And what makes it worse, if you are declined a credit card, the likelihood of you applying for another one right after that is it's a little high, because you just got declined and you want someone to tell you yes. You're thinking, okay, maybe this credit card company declined me. Maybe this other company will approve me, right? Because we all know banks are different. Credit card companies are different. And so if you're declined with one bank and you apply for another one, you're declined again. That's two hard inquiries kind of back to back, and that's going to really hurt your score. Now, it's not going to destroy your credit score, because inquiries only accounts for 10% of your FICO score, but it could drop it, 3 points. It could be 5 points. It could be 10 points. It just depends on how many you've had in the not so distant future, or past rather, I should say. So the other position I have before applying for credit cards is you want to be overly confident in your credit before you apply. And what I mean by that is you want to make sure that your FICO bank card score is in the mid to high 600s or higher, preferably in the 700s. But if your credit score is like 650, 660 or greater, then you have a good chance of getting approved for the majority of the credit cards that are out there. Again, this is your FICO bank card score, not your FICO score, even your FICO 8 score as well, but not your Vantage score, which your Vantage score, by the way, Vantage is a competitor to FICO. So Vantage scoring, essentially, that score is provided to you through companies like Credit Karma and many online sites. Some credit card statements provide Vantage scores as well. So Vantage is a competitor to FICO, but the majority of the credit card companies, the majority of the banking industry, I'd say 95% or greater, they use FICO scoring for their decision makings, lending-based decision making, but not Vantage scoring. Okay, Vantage has a little market share, FICO owns the majority. And so you need to know what your FICO credit score is. And the best way to get that is through really myfico.com. They don't pay me anything for saying that. I just say that because it is the only website out there where you can get your true FICO scores, FICO bank card score, FICO mortgage score, FICO auto score. So you want to know what your FICO 8 score, what your FICO bank card score is, and you want to make sure that score is high 6s, definitely at least in the 7s. Okay, that's number one. Number two is, you don't want to apply for a credit card that you owe money to. I know it seems common sense. Some people, you forget this. So what that means is, let's say when I was 18 years old, and this is a true story, by the way, I screwed up my account with Capital One. Okay, so I had a Capital One credit card, didn't think anything about it, and stopped paying it, and then went to a charge-off status, and of course my credit suffered because of that. You don't want to go back to, let's say I want to start building credit 3 years later, and I see a Capital One credit card offer, which they'll still make you offers. But it's probably not wise of me to go back to Capital One and apply for another credit card when I already owe them money, because there's a good possibility that I'll be declined. Even though my credit's good, I could be declined because I owe Capital One money. So maybe if you give it a couple more years, maybe 7-10 years down the line, they probably won't even remember anywhere. They probably won't even have it on the records. But if you owe a credit card money, you probably don't want to apply for that same credit card again. Another thing is make sure you can afford it. Make sure you can afford having another credit card. If you're kind of paycheck to paycheck and you want to get a credit card just to kind of help get through, I don't think that's a wise thing to do. You probably want to be doing the opposite. You want to maybe look at some of your expenses, find ways to kind of cut some costs down, pinch some pennies here and there, and start putting money into a savings account as opposed to getting a credit card to be that savings account little cushion, right? So that's another topic, another topic for another day. But make sure you can afford it. Don't go to the credit card because, hey, these are going to be for, helping me get by. That's not a good reason to use credit card because you can quickly get into debt, make your problems worse. So I wouldn't do it for that reason. And part of being confident as well for applying for credit cards is making sure that you'll get approved. And by getting approved is they're going to be looking at your score for one. And, two is making sure that you have at least one open account, at least one open revolving credit card with a low balance, good limits, good payment history, more specifically, before you apply. Because what credit card companies typically will do is they'll kind of mirror one another. So let's say that I have a secured credit card with a $300 limit, and I'm using it just to build credit. If I go and apply for an unsecured credit card, like with Capital One or Wells Fargo, whoever, and I get approved, more than likely my credit limit's going to be equal, maybe a little bit more to what I currently have. It's unlikely that Wells Fargo is going to say, okay, we're going to give you a $3,000 limit. And my highest limit right now is $300. It's possible, but it's unlikely. Wells Fargo may say, okay, you can handle a $300 credit limit card just fine. We'll give you $500 automatically. So usually that's how that would work out. So make sure you have at least one open account now before you apply for a new credit card that's reporting in good standing, perfect payment history, low balance, and it's got a decent size limit on there before you start applying for credit cards. And last but not least, even if you are approved for a credit card, you still want to give it some time. You don't want to go back to back again, like I mentioned before on the hard inquiries. You don't want to go back to back so quick. You want to give it some time. And I would recommend waiting about 6 months before you apply for another credit card, maybe 3 tops, but for sure, preferably at least 6 months before you apply for another credit card. A couple of reasons why is because credit card applications like for you to have fewer than 3 hard inquiries in the last 6 months. They don't want to see too many. That's also part of their lending, decision making purpose that they'll use is they'll look at the hard inquiries, how many you've had. And another thing too is they see they have multiple hard inquiries, but those accounts didn't result in credit, like an approval. Then there's a good chance that new company will decline you just based on that because okay, well, these companies aren't approving you. That means something's wrong, something that they see is wrong with your credit. So I'm not going to take that gamble either. I'm going to decline you as well. So that's why you don't want to have too many hard inquiries so quick and apply for so much credit so fast because it could lead to not only point reduction, but also could lead to applications being declined just based on that basis alone. So another thing too is hard inquiries. They typically will decrease in penalty, meaning the damage that hard inquiry is making against your score will go down little by little, month by month. After about 12 months, it has no impact because hard inquiries are not scoreable outside of 12 months, and they're only on the credit report for 24. So the longer you wait in between credit card applications, the better your scores are going to be, the better the application process is going to be, and the more likely you're going to get approved for a new credit card. Okay, so that is my time today. I hope this video has been helpful for you. If you like this video, give it a thumbs up. If you have questions, let me know what you think, or let me know what your questions are in the comments section. Also, be sure to subscribe to my channel for up-to-date information. Last but not least, if you are, in the market for wanting to repair your credit, raise your score, maybe try to buy a house in the future, maybe trying to get better interest in a car or get a car in general, but you're kind of stuck with your credit, not too sure what to do. You need to raise it, but you don't really know what to do. You don't have the time to mess with it. Go to my website, go to joechavarria.com/links to learn more. There's also a link in there to opt in to receive a complimentary, no obligation credit review on your credit report with myself or one of my experts on my team. We'll basically review your credit report with you, item by item, break things down for you, tell you how to repair it yourself. Some other things you can do on your end to start boosting your score. And so if you want to hire us to do the work for you, then my team member will provide you with an accurate quote and time frame of how long it'll take and how much it'll cost to repair your credit. So if you want to hire them to do the legwork for you, my team and I are happy to do that and happy to do all the legwork for you. But at the very least, you'll get to know exactly what to do yourself. So if you do have the time to work on your own credit, you can go ahead and do that. So again, that's joechavarria.com/links. It'll be in the description or it'll be in my bio, one of the places so you can check that out. Other than that, I want to thank you guys for tuning in. It's been another episode of the Joe Credit Show. I'm Joe Chavarria. I'll see you on the next one. Take care, guys.